but you buy gold because it's insurance. And that's how they view it. They view gold as an insurance policy. And this is showing you that, so for example, if you're in the Middle East and let's say you have the means to relocate, right? You're very wealthy, but then you're physically stuck in this area and you want to extirpate yourself. Well, you can't take your gold with you, or not really. It's very, very hard. So you need to sell it and then you need to leave. You can't do that. If you can, you're having to pay a discount, right? Because of these dislocations, physical dislocations and whatnot. This is not an issue with Bitcoin.
We're live. Welcome back to another episode of Token Narratives. I'm Graham Stone, joined by Alex Richardson and David Sencil. Thank you, gentlemen, for joining. All right. So as the conflict in the Middle East intensifies, Bitcoin seems to be catching a new narrative, or not a new narrative, the age-old narrative of Bitcoin as digital gold seems to be getting reinvigorated by the intensifying conflict in the Middle East. We're going to be discussing exactly what's happening around that, looking at some interesting data that's been coming out from Chainalysis and others, as well as an excellent article written by one of our co-hosts here, which we'll be going over some of the details of that. Before we get into that, let's just look at what's happening with the markets. All right. So as everyone knows, oil spiked to over $120. I believe it was as high as 130 on some exchanges, then down to like 80, back up as the war's on, off. Trump's tacoing. Iran is dead. Iran's back. I don't know what's happening. Oil's all over. The Strait of Hormuz is closed. It's open.
They're laying mines.
Tankers are getting bombed. Nobody's getting bombed.
Was it? I think Iran is laying mines, right?
Iran's laying mines.
The White House is putting out meme videos with pinballs. Did you see that?
I did not see that.
Oh my God!
So markets all over the place. Gold has been fairly steady, I would say, after its initial spike to 5,500. It's kind of just grinding around at 5,100, and Bitcoin has been performing better than most assets, I think, compared to, like the stock market, for example. Bitcoin kind of up on the conflict, the escalation of conflict in the Middle East. So that's what we're going to be talking about, I think, with the narrative shift here today. But let's look at some other charts. So, Alex, you brought in this chart. Could you explain this one?
Yeah, so it just shows Bitcoin cycles from the perspective of time, simply time, using the halvings. And I think this is a good argument for the case of a few more months of downside. Just from a simple timing perspective, you can see in other bear markets, after those big red monthly candles, price doesn't rebound right away. Usually takes 6 or 7 months of grinding down and chopping around before things recover. So if you want to take the bearish stance, then this chart kind of makes sense. I think you want to look for a few more months of consolidating before throwing some chips in.
So if things play out as they have in the past, the worst of the drawdown is probably over. The extreme red candles, we've probably seen the last of those, but it's not like we're going to see a like immediate reversal to the upside. We're probably going to be grinding, maybe even slightly lower over the next few months.
Yeah, that's what I would say. And there's some arguments against that. There's a lot of, I think the available data is sort of suggesting lower prices, but not dramatically lower prices. I mean, we're in the midterm year, so Bitcoin likely underperforms because of that. There's the classic on-chain stuff, MVRV, the average cost price. And yeah, so I guess the argument against that would be that institutions and ETF buyers just don't care about any of that. And they consider all those little data points to just be nonsense for nerds. And maybe they're looking at IBIT, for example, the same way they look at an equity. And they're operating on a long time horizon. And they're just thinking, okay, I'm getting like a 50 or a 43% discount from the top if I buy at 70K. So that's pretty decent. So yeah, personally, those are my like two scenarios. Scenario one is we grind down to, let's say, October, similar to other 4-year cycles. Scenario two would be institutions just front run the 4-year cycle, which is pretty consensus right now. Maybe because they think equities are expensive or metals are too expensive. Maybe this military conflict gives us a new narrative, like Bitcoin is a neutral reserve currency. Bitcoin protects against hyperinflation, unconfiscatable narrative. There's an element of randomness coming out because of the war. And there's Peter Brandt's chart. He's looking for a relief rally to about 82 using his banana theory.
Yeah, so Peter Brandt, he mainly looks at technical indicators, and this is a banana.
It looks very sophisticated. Very, very awesome.
Yeah.
But it's like a smaller banana within a larger banana, if you want to get really technical. So it could go back down to that green buy zone and still be trading within his larger picture.
It's bananas all the way down.
Imagine telling someone to buy Bitcoin because it looks like a banana.
All right, let's talk about the NUPL chart, net unrealized profit loss. Not to put you on the spot, Alex, but explain this one, please. Like I'm 5, because that's what my intellect.
So NUPL
measured at,
or net unrealized profit loss. Sure, NUPL is the on-chain metric that measures the difference between market cap and realized cap to determine if the state is in a aggregate profit or loss. So it's like it could be a sentiment indicator. And in this chart, you can see in the past we go a lot lower before bear markets finish. Historically, doesn't have to happen this time. You can see over time it gets less low as Bitcoin matures. So we don't have to go that much lower. But according to this, yeah, maybe we should be getting down to the. Sorry, the chart is too small on my screen. But what is that? We need to get into the green zone, basically.
Yeah. So
like the 15% level.
What would that do for the price?
Well, that's anyone's guess.
Well, no, I mean, to get into the green zone for the net, what is it? Net unrealized profit loss. I believe the number, the Bitcoin price would have to be around 54.
Yeah, realized price right now, the average overall realized cost basis is 54, I think.
So then that would be, if it got to 54,000, then we'd be at 0 on this chart, which would be the start of the green zone. All right. Thanks for the confirmation, guys.
Sorry, you cut out. I had to reset. Am I back?
You're back. Yeah. So if the price goes to $54,000, then that would put us at 0 on this chart. So the green zone, since the net realized, or the net, what was it? The amount that
net unrealized,
the average price of people's holdings is 54,000.
Yeah.
The average price that people acquired Bitcoin at. All right. Lastly, we have a chart from our old friend Plan B. Can we explain this one?
Yeah, so he's doing the same thing. He's using realized cost price, but he's doing different cohorts. So the the average realized price of people who have been holding for 2 years, or I guess addresses that have been holding for 2 years, 5 months, and then the overall, like the average realized cost price, which would be in black. And you can see in the past, we usually go below that average realized cost price, which is what we were just talking about at 54K. So this is another thing that suggests more time and more downside. Although Plan B also has his stock to flow, and I think he just tweeted a few days ago that the stock to flow model is suggesting an average price of 500K per BTC between 2024 and 2028. So his models are conflicting a little bit. Maybe not all models are broken. Some are useful, as he says. So it'll be interesting to see how that one plays out. But this one is suggesting lower prices and more time.
Can I throw a wet blanket on this stuff real quick?
Yeah, please.
Yeah. So I was listening to Michael Howell on Monetary Matters this morning. Really, really good. And Howell reiterated that he thinks the liquidity cycle is tightening. We're in the end days of the liquidity cycle, and risk assets, especially Bitcoin, which is arguably the most sensitive to liquidity movements, do not fare well in this. And again, he made it quite clear that the data shows that liquidity, the rate of change of liquidity is going down. The way that he measures these liquidity cycles has turned down. And it lines up very well with what happened, right? Like the end of the peak of liquidity cycle was like September, October by his model. Prices have gone down since then. He was asked about Bitcoin, and he said that that because it's the most sensitive, he wouldn't be surprised if Bitcoin's price action is predicting what's going to happen with like the stock market here. So you could it's conceivable you could see a drawdown in traditional equities coming.
Yeah, Michael Howell said that that Bitcoin is the canary in the coal mine, didn't he? And so he's saying that it is likely to be leading the way, right?
Yeah.
So other markets are about to get Bitcoined.
Yeah. And the interesting thing is, again, the interesting thing here is that you can see, so like the forward guidance guys, they always talk about like the real economy is reaccelerating and this kind of thing. And Howell acknowledged that. He was like, yeah, so what happens when the real economy starts doing well is money.
There's less liquidity.
Well, the liquidity in financial assets moves from there to things in the real economy, and thus asset prices, financial assets, do worse. So you could still have a case where the economy could be doing very well, but that actually is gonna hurt financial assets.
David, correct me if I'm wrong, because I also listened to the episode, and I got the impression that Michael Howell was relatively constructive on Bitcoin here. He said, did he not say that yes, there could be further downside, but looking at the move that's already been made, one could reasonably bet on Bitcoin here. And I believe he related that to his thesis on gold, which he sees similarly. Yes, gold could draw down to, I might be confusing my interviews here, but I think he said 4,800. And over the medium to long term, it's going up. So similar arguments. Am I not summarizing that?
Yeah, no, you are. I would just say that the what's it called? How this plays out matters, right? The timing matters, and so what I worry about is if there is a drawdown in equities, will that cause Bitcoin to go down a lot or not? Right. And you have people like TXMC, who I really respect on X, say, yeah, Bitcoin's been hit a lot more than everything else. Michael Howell's a canary in coal mine, so the drawdown doesn't necessarily have to be that severe in reaction to everything, like all these other risk assets going down. I would just, and again, on the long term, if you're investing medium to long, I 100% agree. However, I do think you shouldn't like fully deploy now. You should leave a decent amount around, just because we're in a conflict. If this continues on, you could really see some kind of like waterfall event, and I'd imagine Bitcoin doesn't do well, at least in the short term.
Yeah, kind of like what happened during COVID with the extreme red candle down to like $3,000, I believe.
Yeah.
Very temporary though. So basically, but had you been ready there and had the conviction to buy the Pico bottom on that, you'd be a happy man today.
Yeah. And yeah, again, so I'm not saying this is not a decent place to start maybe buying some Bitcoin. I've dipped my toes in a little bit, but I am also of the mind that this Middle East conflict really does set up down. I think it sets up down. What's it called? Downward price action a lot more than it does upward, at least for the short term. So
I think that's a perfect transition. You're probably right, David, but the Middle East conflict also sets up the resurgence of the Bitcoin as digital gold narrative. So let's get into that now. I've got up here on this an article. This was written by you, Alex.
Yes.
It's Arabian Flight. I see what you did there. Wartime is highlighting Bitcoin and crypto's digital gold use case. So let's get into this. Let's get into some of the numbers and what exactly is happening.
Sure. So just to recap, Iran blocked the Strait of Hormuz as part of its escalation, mainly to raise costs for its adversaries and threaten global energy supplies. They threatened to attack ships trying to pass. I think they've shot at 3 cargo ships now, and they've essentially claimed complete control of the strait. And that's obviously affected much of the global economy, obviously oil markets, which by extension affect basically everything: airlines, transportation, logistics, energy, consumer stuff, automobiles, fertilizers for crops. So there's concern over the food supply, tons of things. But it's also affecting how individual people manage their own money. And it's been reported that wealthy expats have been looking at moving money out of the Middle East and into less uncertain areas like Singapore. It's been very difficult for people to trade physical gold because flights have been halted and insurance costs are expensive. So the physical gold markets are very stressed. I mean, not that stressed. It's a $20 trillion market and price hasn't moved that much, but just in that little section of the market, it's hard for people to deal gold right now. But I think the real story is what's happening in Iran. Because just before the war, Chainalysis reported that Iran's crypto market was experiencing, quote, a flight to Bitcoin, which was reflecting rising geopolitical tensions and domestic unrest, etc. And then weeks later, when the conflict intensified and bombs were being dropped, Chainalysis reported that Iranians had begun moving funds off of local exchanges in big numbers. And nearly 60% of those funds, it's in the pie chart on that Chainalysis article, 60% of those funds ended up in cold storage, which suggests a desire of the Iranians to self-custody their money. And then 27% of those wallets transferred their coins to overseas crypto exchanges, which suggests the intention to either just liquidate their money or at least get it out of Iranian exchanges where it's vulnerable to government seizure or cyber attacks. And it's interesting to note that it wasn't just citizens driving all the activity. It was also the Islamic Revolutionary Guard Corps, the Iranian government. They also built a war chest of stablecoins leading up to the war. And in 2025, Chainalysis says that they initiated at least $3 billion worth of transfers throughout the year. So, the bottom line is apparently during wartime, during geopolitical tensions, the general population will turn to crypto to protect their personal wealth, while the government also turns to crypto to protect their trade capabilities and their power. So either way, all routes lead to digital assets. I think it's a big moment for cryptocurrency because war and geopolitical uncertainty allows digital assets to showcase their best utility, which I think is that it's mobile and non-physical, which means they're immune or at least really resilient to a long list of threats. Like, people have historically had trouble seeing the value in digital assets because they say things like, you can't live in your crypto. You can't wear it. You can't eat it. You can't hang it in your hallway and enjoy it. But now I think we're realizing that that's literally the entire point. Because if it exists in non-physical form and it's mobile, that means it's resilient to war and robbery and missiles and government seizures, whatever, extreme weather, capital controls, aggressive taxation, and the closure of trade routes. And yeah, I mean, maybe none of that is important to you because you live in a safe, stable area. Maybe you live on a nice ranch in Montana and you do your banking at the local trustee credit union and your gold is buried out in the backyard and everything's just friggin' hunky-dory. Nothing ever happens. Okay, fine. Maybe you don't really need crypto. But for the rest of the world, which is increasingly descending into war and lawlessness and communism, and digital assets are starting to make more sense. And by the way, Tether's market cap was declining leading up to the war, which is really rare. But since March 3rd, it's been going up. USDC's market cap is up.
Same.
Shares in Circles are up 140%. And I wouldn't be surprised to see the trend continue.
Yeah. I'd like to focus on the Bitcoin gold thing, though, because I think this is a really, really interesting point here. Because I think it was Grant Williams and some of the people who agree with him. They tell investors that you don't buy gold as a speculative instrument. You don't even buy it really as a hedge against fiat debasement. That those things are secondary for why you buy it. But you buy gold because it's insurance, and that's how they view it. They view gold as an insurance policy, and this is showing you that I think for example, if you're in the Middle East and let's say you have the means to relocate, right? You're very wealthy, but then you're physically stuck in this area and you want to extirpate yourself. Well, you can't take your gold with you, or not really. It's very, very hard. So you need to sell it. You need to sell it, and then you need to leave. You can't do that. If you can, you're having to pay a discount, right? Because of these dislocations, physical dislocations and whatnot. This is not an issue with Bitcoin. This is not an issue. And so in this sense, kind of I would say the root of this digital gold narrative, right? As like an insurance policy to be able to pick up your value and move it with you easily, I think shows something that gold can never be, ever. And I think that's quite powerful. And so, yeah, I mean, I don't know if you're like a Grant Williams or Brent Johnson, and you see stuff like this and you buy gold because you want to have an insurance policy. You live in the United States or you live in a territory where the rule of law is sound and the risk of this kind of thing is low. You're still buying gold just in case this does happen. Well, maybe you should also buy a bit of Bitcoin as well, because I think this showcases the fact that gold as the kind of premier insurance policy has a very, very obvious negative showcase here.
Yeah, an obvious weakness compared to Bitcoin.
Yeah. And again, there's other things with Bitcoin, Graham, that you and I have talked about over the years. Like you have a bar of gold. Well, you still have to make sure that it's kept safe in physical storage somewhere. Are you going to keep it in your house? I don't know. You can't really move a lot of it, even if you have the means to move it, right? You have to like put it in an armored car, this kind of thing. If you're going to buy gold, you have to make sure that it is, in fact, the gold that's advertised. It's however pure, and the size is what, the weight is what it is. None of these.
The moment you take physical custody of actual real gold, you not only need to confirm that it is gold at that one end, but then you have the problem of having to do that again when you try to sell it, because now it's not in a vault managed by, some trusted institution. It's buried in your backyard. So who knows what you've done with that since you purchased it. To sell it, you're going to have to run into that same problem, right?
Yeah. And also, so like, I think, Alex, you mentioned like, okay, so gold, incredibly liquid instrument, but it in times of stress, it is not. And this is showing you that it's not, because it's gold is constrained by the physical nature of the thing. The local liquidity is actually quite constrained, and so you see things where gold is selling at a discount compared to the kind of global price of gold. This kind of thing doesn't really exist for Bitcoin. Used to, like 2017 or earlier, you'd have these dislocations between exchanges, right? Graham, I'm pretty sure you remember this, where one exchange would have a different quote for spot Bitcoin versus another location, and then you'd have these charges between that. But the markets have become liquid enough where the price of Bitcoin is quite liquid across all exchanges and all like different ways of selling it. And when you want to sell gold because you need it as an insurance policy and you need to cash it in, you're probably going to always have this liquidity constraint here, right? Kind of definitionally.
Yeah, I would say if there's one argument for gold, like just to be objective, it's that it's probably more fungible. If I give you a gold coin or a gold bar, there's no way that anyone could trace it back to me. Maybe I have like a logo imprinted in it, but you could still melt it down, and it is fully anonymous and untraceable, which is something that Bitcoin is still working on. So again, it's like different tools for different things. Bitcoin is another tool in the box for wealth preservation. And if you do live under a tyrannical regime, then maybe you don't want to have everything in Bitcoin. Maybe that's part of the motivation of Iranians getting their coins off of exchanges. Like they don't want it to be tied to their identity. They want to have it be more untraceable. So that's like one thing that I could see as an argument for gold, is that it's fungible and anonymous still.
Well, I mean, I would push back a little bit on the fungibility, because gold, different. I mean, when you actually buy the physical gold, there's different kinds of gold. Are you buying the Canadian, whatever the heck they call it, or the American gold eagle and all those things? Those are not strictly fungible. Those are different kinds of gold, right? And also, if you think about it, let's say you rock up to somewhere with like, I don't know, $10 million of worth of, you're going to be KYC'd out the ass, I imagine, right? Like there's no way that they're going to be like, oh, sure, guy, let me just let me just take your gold and give you whatever you want for it. No, I don't think so. You're going to be a known entity without a doubt, I'd imagine.
All right. So crypto, Bitcoin advocates kind of having a bit of an "I told you so" moment here, perhaps, with the Bitcoin as gold narrative coming back with this conflict. One thing that I think has been highlighted here as well, though, and you mentioned it, Alex, the bad guys are using the rails just as much as the good guys. So there's this other report from Chainalysis which noted that we had record numbers of illicit crypto volume in 2025, I guess, and it was primarily driven by a 694% surge in state-driven sanctions evasion volume. So here's the chart, right? The yellow.
What does that mean, Graham?
Yellow. What does that mean? Okay, so the yellow bar here is the state, the sanctioned entities transacting with crypto, right? And that exploded 600 or whatever it was percent between 2024 and 2025. So sanctioned entities are using crypto rails to get around the sanctions. Now, I mean, I just want to point that out. That's potentially an uncomfortable narrative, right?
I don't know the details of this, but was this in Bitcoin, or was this in just like crypto assets? Because I imagine a lot of this, if not the bulk of it, is in stablecoins.
Likely, yes.
And so in that case, to me, this is just like almost like a skill issue thing, because all these stablecoins are, of course, centrally issued, right? And eventually, for example, the U.S. government or whatever kind of law enforcement organizations, they will be very, very well integrated in with like USDT and USDC and whatever. And so I can imagine this just being something that's happening now because it's an immature, still relatively immature, and the governments haven't really focused on it yet. But the stablecoin path seems to me like low-hanging fruit to close.
Yeah. I mean, here I've got a chart showing, again from Chainalysis, showing the IRGC, so the Iran Revolutionary Guard Corps. That's the military of Iran's, their share of the total Iranian crypto ecosystem, and it's ramped up from 0 in 2022 to around 50% as of the latest data point on this chart, as far as I can tell. So the IRGC leveraging crypto to run its activities. That's I just want to point out that's a dangerous narrative, I think, for the crypto bros.
Well, to be fair, just because somebody's sanctioned doesn't mean that they're a bad guy. It's kind of that classic argument of because criminals use it, we need to ban it. And to be fair, like criminals are pretty good at spotting new technology trends. It was criminals that adopted the internet and internet commerce before everyone else. So I mean, yeah, just because criminals use it, do we need to take away everyone else's right to use it as well?
Yeah, and then the other thing that you'd point out is you show this chart. It's like, or the volume of crypto running through sanctioned entities, and then it's like, well, now do dollars because that's where the real volume is.
Yeah, or like let's even just zoom in on one bank. It's like, now just do HSBC with the cartels. Go.
Yeah.
It's just like
exactly
one bank. And
the point is, though, right? Like this narrative, it's a very dangerous narrative. We've seen it rise up in the past, and the haters, the Bitcoin and crypto haters, will seize on this narrative. So
it's an interesting little not necessarily conundrum, but like the U.S. has to kind of walk a tightrope here, where like what we saw with their actions of seizing Russian assets, dollar assets, has had a deleterious effect on the like the dollar's supremacy. Without a doubt, it's shaken confidence in the dollar being like a neutral asset. The U.S. government wants to push stablecoins out to the rest of the world, right? They want them to proliferate. So they probably want to have like a light touch with this, where you don't want to go full on, let's fully integrate into Tether's system and USDC's or Circle's system so we can insta freeze, fractions of a penny anywhere in the world whenever we want. Because then, obviously, a lot of actors, governments, and whatnot will kind of shy away from holding those stable coins, right? So you want to kind of, I think they have to try to strike a balance here of not making it too, or not playing their hand too hard like they did with Russia. And I think they've learned their lesson after that. And so I can imagine them looking at this and be like, I guess we can let it go. 3 billion, blah, 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 you know?
Yeah, that's a good point. They've definitely overused the sanctions over years. A lot of people have pointed that out, and it's backfired.
Nice. Yeah. So again, I'll be interested to see how this plays out. Just on this stablecoin note, while we're talking about it, just because I was thinking about it, I interviewed a gentleman from Hungary this week, and he was talking about dollar-denominated stablecoins, and he echoed Yatsui's words that a lot of countries, and the people in the countries are actually worried about being dollar colonized. I think this is a great phrase, and in that governments have a responsibility to make sure that their country isn't colonized further by dollars via stablecoins. So anyway, that's just a little side note.
That's going to be really difficult for them to do, in my opinion. When you can access dollars on your phone, tapping stuff on your screen, and you can automatically have access to global markets and tokenized stocks and inflation hedges and perps, like, why would you not convert your local currency to dollars? Like, I just, the conspiracy theorists have been talking about the one world currency for a long time, and now I think it effectively exists with stablecoins.
America.
That's right.
No, I'm joking, but no, I kind of agree with you. I don't know. I've come around a little bit to this though. Like I think these countries do need to do something, right? Like they can't just cede all this power away, and so it's interesting to see like what are different countries going to do to. How are they going to attack this problem? You have like the Bank of England, I think, and maybe the ECB on one side, which are just kind of like making these, I think, toothless, maybe trying to do a toothless thing where they're like, you can only have $20,000 of U.S. stablecoins, right? I think that's like you said, Alex, that's really easy to kind of circumvent. But then what else? What other tools can you do to kind of try to make it so that you don't just see this massive flight away from their local currencies?
Shut off the internet. I can't think of a single thing. It's over for these local currencies, in my opinion.
Yeah. So about that, right? Shut off the internet. Like you've got the firewall in the Great Firewall in China, but that doesn't stop people from using crypto in China. Yeah. So really, the only thing you can do is actually shut off the internet, and then as David's pointing out, there's Starlink. So
yeah, so you have Starlink. You get a Starlink into your country. I was actually talking with a gentleman from LATAM, right? Not going to dox the person, but they were saying that Starlink was quasi illegal to bring into the country, kind of for this reason. But people were still bringing Starlinks in all the time, and they had like a massive premium. So whatever the cost was, whatever is like $300 400. It was going for like 1,000, but they were just going in, right? So they would buy them in like surrounding countries where they were legal, or even in some cases, he said they would just buy them in the U.S. They would register them in the U.S. and then they'd smuggle them into the country so that they could have unrestricted internet. So again, how do you stop this? You can't turn off the internet effectively when you have something like that, right?
All right, let's go into one last topic for the day, and that is this post from Jeff Dorman, which is, it goes into, basically he makes the statement that crypto is uninvestable. So David, I know you wanted to talk about this one.
Yeah, I thought we could have a little debate on it. I'd like Alex to kind of set this up for us, lay the table, sir, and then let's to get your opinions.
So Jeff Dorman is the chief investment officer at Arca, and he shared a quote controversial opinion, which is that the biggest reason for the big disconnect between crypto prices and crypto adoption is that 4 of the top 5 assets by market cap are largely uninvestable. So that would be, of course, Bitcoin, Ethereum, Solana, and XRP. And he says Bitcoin is largely uninvestable because of things like the quantum fear and how it's not going away. He says it's not digital gold, contrary to what we were just talking about. It's not an inflation hedge. He says that for ETH and SOL, they have too much inflation outweighing the fee capture, too much block space. You need 1,000x more activity and transactions to warrant today's valuations, like if you were to value it the same way you do with a stock like P&E. And then with XRP, he says XRP is literally the opposite of good token design. And this is a pretty important thing to touch on, I think, if you're a crypto investor. In my opinion, the main problem with cryptocurrencies and these tokens is that they don't behave like equities. They don't behave like equities in the sense that they don't channel value from the technology to the holder. And I think a great example of that would be Uniswap. Uniswap is like arguably the greatest innovation in cryptocurrency. I would say like Uniswap, Aave, and maybe Bitcoin. I don't remember what the statistics were, but at one point Uniswap was doing more volume than like some of the largest stock exchanges in Europe. But at the same time, what the hell is Uni token? A governance token? So if I buy $100,000 worth of Uni, then I get a 0.01% influence on a vote, on some inconsequential vote about like how much to raise or lower fees. That's stupid. That's like me telling you guys to invest $100,000 in my house, and in return, you guys get to vote on like what color I paint my shed. Like there's no value. When you hold an equity, you have a board of directors that have a fiduciary responsibility to maximize value. They might give you dividends. There's share buybacks. The value is clearly channeled down to the holder, where you're just not really seeing that in cryptocurrency. And I think that's what Dorman is trying to say here.
All right. I love that metaphor. I'm going to say pink for the house. Does that make the value, the $100,000 I put in, does it, that probably makes it like pump at least 10%?
Yeah, well,
Hopefully
I mean,
more.
just the Uniswap thing has traditionally been true, but I mean, right, like the unification thing is trying to right this historical wrong, and it should be noted that they never wanted to have it just as a governance token. They were held up by the SEC. Hayden Adams had that like really awesome quote where I think he directed it at some lady who worked at the SEC saying, "Fuck you. You took away like 5 years of my life." Just like, I thought that was awesome.
Yeah, obviously a big part of the problem is that by law, the regulation, the token can't be equity. So that's, it hopefully will be solved and they can be equity, and that's how they should be. But then let's talk about the other, because there's some tokens that don't work like that. So like Bitcoin, and then potentially like ETH and SOL. Right. Now, I agree with Jeff Dorman here on the ETH and Sol question. I think those continue to be uninvestable, but Bitcoin, I would argue, is an exception. And the quantum thing is that's a boomer FUD take that he thinks that's real. And so, what else you got?
Okay, well,
Z Rising Zek.
Let's
Zek's already back down to whatever it was, isn't it?
Let's focus there on the ETH Sol thing, Graham, and kind of broaden it out on that. L1s, L2s, all uninvestable, Graham. I know Al God made a post this week. Was it yesterday, Alex? Basically saying you can't buy L1, L2s. No L1 or L2 is worth its valuation, and so stay away. What say you, Graham?
Yeah, I mean, you need a couple bucks for gas. that's why it's not investable. You need you don't need it.
Okay. So, Alex, what do you think? L1s, L2s, you agree with this?
L2s definitely. L1s, it depends on how much activity goes up the next few years, but it looks like we're going to need a big explosion of bots because we're not onboarding people, apparently. So it depends what the agentic economy looks like. Otherwise, no one else is buying Sui or that much Sol. They're definitely not buying these L2s.
But even the bots, they don't need much of the native token to do their thing.
And also the whole, I kind of agree with Graham on part of this. I think there is some room, but Sol, I very distinctly remember Kyle Samani and some of the other kind of leaders of Sol talking about how they want gas fees. Basically, they want and they believe, and I think this is probably right. Gas fees over time will trend to zero. Right? It's they and anything more than that is a failure. Right? If you have gas fees,
that's exactly what he said.
Yeah. So then why the hell are you going to buy? Why does Sol have any value then? I guess the only other thing is what they say it's the REV, right? Their new take on MEV.
Yeah, that would be it. So anyway, there are what else? So ETH Sol, the layer ones, we think, agree, not investable.
Obviously, stablecoins uninvestable, right? That's in the top 10. Basically, you have Bitcoin.
XRP,
you have Bitcoin. You have a bunch of L1 or L2s. You have stablecoins, and then you have, I guess, somewhere in that list, meme coins, uninvestable. Basically, right? I don't think anyone would really disagree with that. Speculative play, okay, but investment, no.
Yeah.
And then you have, I would put, it's funny that Alex would mention it. I'd put the only really investable thing in the top 50 would be DeFi tokens that have either already turned on the fee switch or have indicated that they're going to turn the fee switch. So you have your Uni, Aave, obviously Hyperliquid, and things of that nature. Those seem like they're investable, but the problem with them is, are their valuations already too high right now to warrant buying at these prices, right?
Chainlink could be another interesting one if they figure out a way to turn on the fee switch.
I know cameraman Daniel will love to hear that. He is a mega Chainlink bag holder. So shout out to you, Daniel. Chainlink can get that working. Maybe. I kind of, here's my overall take. I kind of agree with this. I kind of think that most crypto assets are uninvestable. And the only one I really kind of disagree in a big way with is maybe Bitcoin. The problem with Bitcoin, though, is, at least for a lot of the people who traditionally put money into crypto, how much of a return are you going to get on Bitcoin versus I don't know, going into some AI slop crap stock, right?
Yeah, well, it's like we discussed earlier, the profile of people investing in Bitcoin might be changing, and it might more and more be people who are just looking for insurance. And you just allocated a few percent as a gold alternative.
Yeah.
In
So,
Dorman's
I don't
opinion,
know. I personally... Go ahead.
Yeah, I was going to say, in Dorman's opinion, price will start matching adoption if the industry pivots away from BTC, ETH, Sol, XRP, and meme coins and into the stocks and equity-like tokens that fuel DeFi. But he doesn't mention any equity-like tokens by name. So that'll be interesting to see if that plays out.
Yeah. And the other plays though in this space, like he mentions, stablecoins and payments, obviously those are probably going to be great investments, but those are not like crypto native investments, right? Like you play that in the traditional equity market, don't you?
Yeah, that's like
Well,
Circle,
you buy,
Coinbase, maybe PayPal.
Yeah, and Stripe and things of that nature, right? Like something like that.
Yeah, or private equity in like unlisted companies, startups.
The one thing that he doesn't mention, which Algod is like kind of really, really gunning for here, is the AI crypto space. Which
I was going to bring that up.
Yeah, I think that is investable. I really do think there is something to it.
Is it investable or is that speculative? Because do not most of those run into this same issue as what he's talking about here, where the token itself does not accrue value directly from like the usage of the protocol or the network. So it's really just speculative still, isn't it?
No, well, so I would separate that out. I think most of the AI crypto stuff is just going to be like, what do you say? Just like a word salad that's going to try to hoodwink you out of your money. So yeah, speculative stuff. But there will be new projects that do things that don't exist and basically can exist in traditional AI companies because they're going to be like decentralized first, kind of. And in that case, I think that you can get tokens that have a revenue. And again, it's going to have a revenue like stock like feature, dividend like feature. Yeah. But here's the difference: is like you could say that Hyperliquid or some of these other perp dexes now are overvalued, right? You could say, yes, this has real value and it's great, and the revenue model works, but right now it's not worth more than whatever it is, like $40 a token or 20, whatever you want to say, $20 a token. The AI crypto stuff though, this is like really, really, really new, and most of it is bad. But I imagine if you can find some of the good ones that actually do something unique and useful, those are at lower valuations, right? Probably at good valuations, and so you could argue that is probably the most investable thing. The hard part is you have to do the hard work and find what are the good projects here. What are the ones that actually can make money? What are the ones that are sustainable and have like a moat of some sort? This kind of thing.
And have the actual correct tokenomics.
Yes. Right. So that's hard. And to me, though, that does seem like the most exciting thing, especially when I look at all of this, how important AI is. And we all use AI every day. But there are like huge downsides to AI, right? Obviously, the centralization, how there's like basically no privacy. There's no guarantees on your data. You're giving your data to them, which is valuable or has some value, potentially has some value, and getting nothing in return. All these things to me kind of speak of ways in which crypto can be positive and add to AI. If you're just going to say like, oh, we're just decentralized AI, that on itself, on its face, doesn't seem particularly good right now, right? It's like, well, why do I care about decentralized AI if I just want it to do, I want it to code better or I want it to write better, right? Like it's not good enough yet. I don't really care about that. So anyway, that's what I would say is the most exciting. I don't know what you guys think.
Yeah, there's definitely opportunities. And there will be opportunities.
Yeah, the kingmaker trades are there. but it's just so early to tell. It's too early to tell. David, didn't you just interview Yatsui of Animoca, and he made a prediction about 50 billion agents?
Yeah, he made a prediction of 50 billion agents. Now, again, how many of those are going to be, or how many of those need to be tied up with some kind of decentralized crypto project thing? I don't think I would put it at a very small amount, personally. I think it would be a very, very small amount. But you could still be like 10% of that or 5% of that, and that's a huge market, right? Graham's heard this before, but like one of the best things on like the kind of the value of AI and crypto is it won't really be felt for like another 5 to 10 years. And it's basically Hasib Quresh and Avichal from Electric Capital had they had a panel at a small event in California last year. And they were basically saying, the thesis is basically this. Anyone who uses AI today doesn't care about decentralization. They just want the best, right? But 2, 3, 4, 5 years from now, when AI, even like the base model AIs are going to be worlds better than what we have today, at that point, people are really, really going to care about privacy and like enforceable privacy, right? Like trustlessness. They're going to care about that. They're going to care about having censorship resistance with access to their AI models, so that Anthropic can't, for example, decide that, yeah, you know what, we're turning you off. You don't get access anymore. Gated, done. Right. That kind of thing is going to matter eventually. And that's where crypto and some of these like cypherpunk cryptographic crypto axioms, ethos will matter a lot. In the same way that no one really cared about Bitcoin in the year 2000, right? Like it didn't really matter that much, right? You needed to have things progress to a certain level where then censorship resistance and this kind of thing matters. So that's that. But the point though is that you have to start now. So you have to invest now, and some of these projects are being launched now. And then when people realize this is important, kind of the big kingmaker trade, as you say, that will already have kind of been locked in, right? You would have been invested earlier than that, because then it'll blow up like that.
Okay, so I'm proposing to do our homework. I said this last week, but I did not do much digging into which AI projects. It's not going to be that easy. I think we have to keep our eyes on it, and let's try to surface the narratives and projects on this show, Token Narratives. That's it for this week. We're going to wrap it up there. Alex, David, thank you so much. And to everyone who made it this far, thank you as well. Have a great week.